Do you know the problem with keeping all your eggs in one basket? One slip, and they all come crashing down. And the same applies for where you keep your money. But don't worry, Insignis Cash lets you spread your savings across leading banks, maximizing security, flexibility, and returns. No more sleepless nights, no more smashed eggs. So get cash clever with Insignis. Visit insigniscash.com now to learn more and get started today. That URL again is insigniscash.com.
Hey there, Fintech Insiders. We interrupt your usual podcast listening to ask a teeny tiny favour. 11FS is in the running for Consultancy of the Year at the 2025 British Bank Awards, and a 5-star vote from you would absolutely mean the world to us. It has been a busy year at 11FS. Not only have we brought you over 120 episodes of Fintech Insider, our ventures team have also been very busy working with global brands to change the fabric of financial services, whether that's designing new digital wealth propositions to helping credit unions all over the world serve younger people better. And that really is only scratching the surface on the great work that the teams have been doing. If you want to help us out, head to 11fs.com/vote or click the link in the episode description to vote for 11FS and help us bring home that trophy.
Hello and welcome to Fintech Insider Insights. I'm David Barton-Grimley, Fintech Strategy Director right here at 11FS. And in this episode, we're discussing loyalty. So what is the longest relationship you've ever had? I'm guessing family, friends, or your partner will be up there. But how about who you bank with? From opening your first account when you're a child to buying your first car, your house, and planning your estate, our relationship with financial services spans an entire lifetime. Many people used to spend their entire lifetime with one institution, yet is the relationship only really skin deep? With the introduction of mobile technology and fierce competition over the past decade, we've seen people's loyalty fade pretty dramatically. So how can banks and FIs in 2025 and onwards put loyalty back up the agenda? Well, luckily, I'm joined by a great panel of guests, all of whom work for companies doing interesting things in the space to discuss the current state of loyalty in financial services. So first up, we have my 11FS colleague and co-host joining us today, Benjamin Ensor, Director of Research and Strategy at 11FS. How are you, Benjamin? How's your January?
I'm really well, thank you. It's started incredibly busy, just really flat out, which is great, but also was a bit of a shock after a relatively quiet December.
To kind of switch my brain on, I tend to find in the first couple of weeks. Great to have you on board. And next up, we have Fintech Insider debut for Vuoko Aro, VP of Design at Monzo. Welcome to the show, Vuoko. Now, Monzo is well known for its design, and we'll be hearing more about the details later. But can you tell our audience a little bit more about what you've been working on currently?
Of course, yeah. Thanks for having me. I'm Vuoko, I lead design at Monzo. I've been at the company for 8 years since we had just had a prepaid product in the market and had worked across everything since then, the product and the brand. We currently have a design team of about 80 people across product design, brand design, and user research. So I work across the customer experience, across everything people see and interact with, whether that's the structure of the app, the features we build, things like our bank cards, brand campaigns, everything else. So been doing a lot of all of that recently. It was a really big year for us. Last year, we launched new subscription tiers, accounts for larger businesses, kids accounts for under 16-year-olds, a lot of industry-first security features, a lot of brand things as well. So that has kept me busy. We've had a big start to the year already. We're just in the second week of January. We launched something we're calling the 1P Savings Challenge last week, and it's doing incredibly well, I think, actually fitting with the theme of the show as well. So it's been an energetic start to the year, and very fun.
Yeah, sounds like you guys are killing it. Amazing. Great to have you on board. And last but not least, it's a warm welcome back to the show for Tim Chong, co-founder and CEO of Yonder. Thanks for joining us again, Tim. Please tell us a little bit about yourself and Yonder.
Hey, team. I'm Tim, and I'm one of the co-founder CEO of Yonder. So Yonder is a modern lifestyle credit card designed to help young people make the most of their city and travel experiences all over the world. So we partner with restaurants, entertainment venues, wellness venues, theatre, travel experiences, to give people this really, really rich experience with their money, getting more than just airline miles or cash back, but creating essentially a companion experience for them wherever they travel all across the world. And I would say best described by a customer as Monzo and Amex and Secret London had a baby.
I've never heard anyone describe their fintech like that before. That's amazing. I love it. That's really cool.
It wasn't me. It was a customer. So
I love it.
It's always how your customers describe you.
Absolutely. Yeah. No, that's key. Amazing. Well, it's great to have the three of you on, and let's dive in. So to kick off the show, let's try and define what it means to be a loyal customer in financial services and what some of the key trends around loyalty are. And we're going to kick off with a bit of a stat. So PwC ran a study and found that 50% of executives think that subscribing to a product or services indicates brand loyalty in some way. But if you look at the customer side, just 1 consumer in 5 actually thinks that's the case. So obviously, there's a bit of a dissonance here between what people think loyalty is and what it actually is. And you know, looking at you, Tim and Vorko, the both of you in different fintechs tackling loyalty in different ways. I'm keen to hear how you see loyalty. I mean, Tim, let's start with you at Yonder. I mean, what is loyalty to you?
Yeah, I think for me, there's almost a rational answer, but I think that lacks texture. I think the rational answer for me is more than just subscribing. It's actually continually using it. And in the tech world, you might measure that through like DAU, are they spending on the card, are they engaging with your app? I think that's true to an extent, but you can engage with something daily but not be loyal to it. Think about your plumbing. I engage with it daily, but I don't say I'm loyal to my plumbing. It just sort of works for me. And so I think there's a blunt instrument way of measuring loyalty, which is sort of essentially measuring things or actions. But I think actually for me, loyalty is about how you feel about things. And if you go back to almost first principle, if you're loyal to a friend, you have an emotional connection with them. You have a posture towards them of almost like fighting for them or allied with them. And for me, I think loyalty is more on the texture of it, which is how do you feel about that brand? Do you feel like you want to fight for that brand as well? Or do you feel like you're an ally with that brand? And for me, loyalty goes much deeper than just a transaction, but really how you feel. And it's very deeply emotional. Hard to measure, I think. You can measure it through proxy metrics. And I think the metrics are a useful way to measure it. But going back to the plumbing one, you can be using it, but not be loyal to it.
That's so interesting. And Vorko, how do you see it?
Yeah, similar tracks. I think definitely when I think about loyalty, definitely getting so much value out of a product that you keep using it over time. That's got to be part of it and making it part of your everyday life. But I agree with Tim that there's got to be an emotional connection there. And then I would also say probably recommending a product to their friends and putting your own reputation on the line, kind of becoming an advocate for the product. Because, you know, people don't believe that much in this world, but they believe their friends. And we see this a lot as well. I think on average Monzo customer has 41 friends on Monzo, and most people learn about Monzo through someone they know. So I think this is a big part of it, the emotional connection and actually recommending something.
And that recommendations has been so core to Monzo almost since day one, right? With the golden ticket, and I just remember all of the hype around that. I mean, we talk about that a lot in the fintech industry. That sort of, you know, you being as a customer an evangelist for the brand is so interesting. Benjamin, I want to come to you because I know you've been doing a lot of thinking in the space over the years about what loyalty is and how it changes. In the UK, we often talk about the bank of mum and dad, right? And how a lot of people are still, you know, sort of quite sticky to those incumbent financial institutions that, you know, some of the parents have over the years. Do you see that as being the case?
No, I don't think that's true anymore.
Yeah.
I think 15, 20 years ago, that was true. And we were seeing people in Britain and people all around the world going to the bank that their parents went to, age 15, age 14, age 16, whatever. That isn't happening anymore. If you look at young people today, they're asking their friends, who do you bank with? They're discovering accounts that enable them to get free foreign exchange because they're interested in travel. They're discovering accounts, you know, with interesting features. They're figuring out who's got a decent app. So actually, I think this has fundamentally shifted in the last 10 years or so. And young people today are not going to their parents' bank. And so we've actually seen a big shift. And one of the interesting things is actually if you talk to some of the large established banks, they can see this, right? They can see, wow, we've got a big problem because our customers are getting older and older. You know, we're not winning customers in their teens and in their 20s anymore. our customers are in their 30s and their 40s and their 50s, which means in 10 years' time, oh dear.
Yeah. And the younger generation is going straight to institutions like Yonder and Monzo. I mean, Vorka, how have you seen this play out? I mean, are you seeing customers being increasingly multi-banked? Are you seeing younger generations start with Monzo first, for example?
Yes, we see all of that. Like I mentioned that we launched under 16s accounts last year. They've been incredibly awaited, and I feel like we're really filling a need there. But we do also see people hold multiple accounts open, and I think it doesn't matter as much as what you have open, but how much you interact with something and how much of a daily part of your life really an account becomes. So what we care about is really the quality of interaction and like the user experience that builds quality loyalty over time, and like becoming the interface to manage it all as well. Obviously, big part of our proposition at Monzo. So this is why we make it easy to sign up and try the experience for yourself and see how it's different, and then start doing more and more with us over time.
Both of my children, who are in their late teens, they both chose their own digital bank. Now, obviously, I'm a little bit biased. I have some occupational expertise. But interestingly, they chose different banks. So I said, well, you should look at these 2 or 3. And they looked at those 2 or 3, one of which might be on the call, might not be. But they chose different ones, interestingly. So they one of them preferred one because, certain features, and one preferred the other one. But that point is they looked at what were the digital capabilities, they figured out what some of their friends were doing, and then they picked.
Yeah, it's very interesting. And Tim, Yonder as a modern credit card, let's say, is almost part of that multi-bank, multi-financial institution trend. I mean, how are you seeing it? Are you seeing, for example, customers having Yonder as one of a portfolio of credit cards that they have, or is it all about consolidation for you?
Yeah, I think it's a combination of both. I mean, I think what we have always said, we never want to be a current account. We think there's a lot of great current accounts in the market. But what we really want is to capture your primary spend. And because that sort of drives everything, right? You spend with us, you then discover more, you get more value with us. You then tell your friends about us. You then go to dinner with your friends and tell them about us. So for us, it's always been about Yonder being a place where, as someone described it, you put your fund spend through Yonder, you put your borrowing spend through your bank account. So your mortgage, your bill, your car payments, your utility bills, direct debits, do that through your bank account. But putting your day-to-day fund spend, whether it's eating out, whether it's traveling overseas, put that through Yonder as well. And so we kind of see ourselves as, in a way, playing a very different role in this sort of neo-banking era. We'll kind of see sort of 2 types of sort of personas of people. One who are very familiar with credit cards. They might have an Amex, they might have a Barclays card, and they will either replace those cards with Yonder, or they might use us for specific use cases, whether it's traveling, whether it's particular types of spend, and they'll occasionally then shift their spend across over time. And there's another group of people as well who have never really considered credit cards at all. They've only always been using a debit card, so they're more like a traditional Revolut, Monzo, Starling customer. But what they're looking for is actually something more rewarding from it. They're looking for a much richer experience. Or they might be looking to build credit as well. So one of those sort of factors might lead them to use Yonder. So they've never used credit before. They've never used a credit card before.
That's so interesting. And Tim, actually, I'd like to stay with you because, a lot of what we were talking about before, I think, with Monzo is this idea that we can grow organically, right? And any startup wants the ability to grow organically. Refer your friends, build your base, and so much of Monzo's success story is based on that. But the reality of the situation in the fintech market is it is competitive, whether it's a credit card or a bank or any other type of fintech. So you're looking at your customer base and saying, how do we grow it? How do we grow it exponentially, particularly if you have a VC who's backing you and demanding that kind of growth? So I suppose the question here that I'm trying to get to is like, how do you actually go about and incentivize that attraction? How do you get the customers in the first place? Tim, what kind of tactics do you use, and what works?
Yeah, and what we've seen with a product like ours is that it is one inherently quite social. A lot of the rewards that we have, unlike airline miles or cashback, I call them solely player rewards. You use them yourself, you get a cashback, you don't talk about it. A lot of our rewards and experiences are done multiplayer. You do dinner, you do it with friends. You go to the theater, you do it with friends. You organize a night out at a new experience with Yonder. And so a lot of the product sort of has inherently social elements to it, even down to things like you book a restaurant through Yonder, you invite your friend to the restaurant booking. So the first angle we've been really thinking a lot about is how do we continue to make more natural ways to talk about Yonder, and also continue to provide more natural ways where it's part of your natural social life. So we've really always said that we don't want to be a fintech brand, we're more of a lifestyle-oriented brand. I think the second thing that we're thinking a lot more about is we know that a product like ours is more of a considered purchase. Majority of the customers want to probably go down the membership fee-based product, which is very different to sort of a Monzo. It's debit card, it's free, it's sort of very easy to sign up. Our product's quite hard to sign up. There's a credit check, there's income verification. Most people would prefer to pick the fee-based product because you get a lot more rewards with it. And so we think a bit more about our marketing as, hey, you don't need to sign up to us on day one. We just want to expose you to our brand. And so for us, the content side of our business is a lot more important as well. We do a lot of marketing through our content partners as well. And if you go to our Instagram, a lot of actually the work we do is almost a bit of a media business as well, where you'll discover brands, you get introduced to Yonder as a brand through the partners we work with, as just sort of lifestyle experiences. And so we're kind of different in the sense that we're not trying to be a sign up right now in a spot, try us out. We're more like a get to know us through the media business, get to know us through the partners we work with. And then when you're ready to sign up, then you can go through the process of a credit check and income verification and things like that.
It's so interesting to contrast the kind of fintech startup way of thinking that I think you've articulated here through, social networks and the amplification of relationships. Would you contrast that to how some of the incumbent banks around the world are attracting customers through basically cash rewards? And there's some very interesting stats here that we have. Like if you look in the US, for example, like Bank of America, $300 when you open a new checking account. Wells Fargo, $300. Citi, $325. In the UK, $150 for switching. So that's nationwide. Santander, First Direct. I mean, this is a lot of money. This is a huge amount of money to attract customer. I mean, Vorko, does Monzo do this as well? When you see other banks offering cash rewards like this, how do you think about it?
Sure. We do offer cashback on spending. We have referral bonuses. We have partnerships as well. But I think the way we think about it is, of course, like a transactional reward can help, bring a person in. But then after that, how can we really become a part of, like a meaningful part of people's lives? Like what will make people want to actually keep using the product, see value in it, other than us paying for loyalty? So what else are we offering? So this is where we spend most of our time, obviously, building software that's really meaningful and can help people build confidence and capability. It's almost like, give a man a fish or teach him how to fish kind of thing, where we really want to educate and make things possible that previously weren't to people. So this is a lot more powerful and valuable, obviously, because it also scales without additional cost.
I think we've slightly gone off the topic of loyalty here in a sense, because here we're talking about customer acquisition, which isn't really loyalty. I think one of the challenges for some traditional firms is that they haven't given customers stories that they can tell themselves, and they haven't given customers stories that they can tell their friends. As both of the other two have been saying, you need to have emotional stories that customers tell their friends, right? If you want that advocacy where customers start promoting you to their friends, well, you've got to give them a reason to do that. What all these traditional firms have done is they worked out, hey, our cost of acquiring a new customer is $300, so we might as well just give that straight to the customer. And great if that helps you overcome the inertia. But you've got to do more than that. You've got to give your existing customers reasons to tell their friends about, hey, I use this firm and it's great because X, Y, or Z, because that's what human beings do. We tell each other stories. So give your customers stories. They can tell their friends about why you're great.
Yeah, absolutely. So Benjamin, I think you're right. I think one of the things that incumbent financial institutions all over the world really struggle with is the technology estate, right? And how difficult it is to do some of the amazing things that, Monzo and Yonder will be doing. So I imagine, Vorko, when you're looking at your world and, your product roadmap and some of the things that you can do, the agility that you have to develop new features and bring them to market that create that kind of stickiness and that kind of impact is much higher in some ways than some of the incumbent banks, which are looking at it and say, my God, it's going to take me six months to release a feature. So maybe there's another way we can do it, right? Maybe it is through cash incentives. Maybe it is through rewards, etc. But yeah, I think it's a very good point. I think that we would be remiss in this discussion not to talk about rewards and loyalty points specifically, because I think it's very, very interesting. Take me as a customer. I have an Amex, and I accrue points. I converted pretty much straight away to Avios because I'm pretty sure so many people do that. Do you think, Tim, that we're kind of in a moment in time where points have stagnated? Because I suppose a lot of what you're doing at Yonder is to try to innovate the idea behind points and what that brings to customers, because it's a strong hook, right? But how do you show that actual, impact to the customer, that you accrue these points and you can spend it and get value from it?
Yeah, totally. And maybe a year ago, I spoke to one of the Amex executives who built the Amex Reward program in the 1980s and 90s. And what's interesting is two things. One, what he built then has not changed since 40 years later. We're still using airline miles.
Yeah.
Which is slightly insane and bizarre. If you think about consumer spend, that's just one small category of spend. And I always say that what we're interested at Yonder is like looking at all your discretionary spend and where can we play a unique role in making that experience even better. And travel's one element of it, but it's only a small element of it. I think the second thing is that done well, it should create more value than just financial value. And so if you go down the world of just competing on cashback, look, we're never going to outspend Chase, who will happily lose money on every transaction. When your interchange is 0.2%, how do you fund 1% cash back? Well, you're just going to loss lead with it. And so we'll never be able to outcompete in that world. But when we said, well, what's better than more cash? Actually, the best things in life aren't about the money. The best thing in life are about the experience you have there. And so how do we create value beyond just financial value? Now, we have to provide financial value, right? That's really important. We give key amount of financial value. But how do we make that even better? And even if you think about what airline miles did back in the day, it was this aspiration of one day I could fly business class and I never would.
Yes.
One day I will treat myself to something really special at the lounge. And so it's really about the story of something elevated, something special. Now, we've sort of taken that same ethos and said, well, why don't we apply that to other categories of life? I love hearing a customer who said, hey, I normally wouldn't go to this restaurant myself, but I'm going to go celebrate our 1-year anniversary with my girlfriend, taking her on a date there. Found it through Yonder, and I'm going to get a whole dinner covered in Yonder. Now, the experience wasn't just about I gave them £100 off their bill. It was like I had a night out. Or a father who said, I'm going to bring my kids to London. We don't come to London very often. We're going to bring them in and we're going to take them all out for dinner. And it's going to be a really special experience. So then we're going to go out for theatre after that we found on Yonder. So all of a sudden, this narrative is more than just financial value, but it's something emotional and experiential value as well. And that's really, really important to us. And I think that if you just compete on financial value, it's going to be who's got the most amount of balance sheet they can deploy to outspend you. And in a world, where we're not the biggest player, we can't play in that game, but we can play a very different game.
Yeah, because at the risk of it becoming a lowest common denominator. Volker, I just want to bring you in for a comment on how Monzo's thinking about it.
Sure. Yep. We're also not the biggest player in the market, and we have invested a lot in customer experience and that emotional connection, and it really works for us. Clearly, banking, like any industry, is no longer just a utility or about function. And in fact, I feel like a lot of our functionality has been copied over time, but what can't be copied is our connection to the customer and the co-creation and that emotional connection. So whether it's call it brand, the customer-centric product and the connection we have, that's really special to us. And I think we work as one design team across all of it. Brand, product. The brand is really embedded in the product, where we don't have shiny marketing over here, clunky, boring product over here. It's really kind of a consistent level of quality and delight that we are able to achieve. And I think that's part of it, really connecting it all.
That's such an interesting insight. You can copy a UI, you can copy an interface, but you can't copy a brand. And that's absolutely critical. On that note, we're taking a short break. And when we return, we'll explore the future of loyalty in financial services and how your organization can build deeper, lasting customer connections. In today's competitive landscape, this could make or break even the most innovative fintech or established banks, as we've been discussing so far. So it's all coming up at this quick break. So grab your notepads and stay tuned.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alika Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Still getting around to that fix on your car? You got this. On eBay, you'll find millions of parts guaranteed to fit. Doesn't matter if it's a major engine repair or your first time swapping your windshield wipers. eBay has that part you need, ready to click perfectly into place for changes big and small. Loud or quiet, find all the parts you need at prices you'll love. Guaranteed to fit every time. But you already know that. eBay. Things, people, love. Eligible items only. Exclusions apply.
Welcome back to Fintech Insider Insights, where we are diving into loyalty. So in the first half, we explored the current state of loyalty in financial services and how traditional banks and FIs attract and retain customers. With rising competition, it's clear consumers are now voting with their wallets, a shift that will reshape the industry and is already reshaping it, to be honest. In the second half, we'll look ahead at the future of loyalty and explore actionable strategies that you can implement to go ahead. So on the panel, Vuoko and Tim, you're both from two very interesting startups who are thinking about loyalty and customer retention in various different ways. Vuoko, I'd like to come to you first because, you kicked off the conversation by saying that Monzo have been releasing a whole bunch of very interesting stuff in this area. So I'd love to get you to take us through that in a little bit more detail. For example, you've got Monzo's magical moments. How are you using all of that to keep people loyal?
Sure. I could talk about this all day. We talk about Monzo Magic a lot internally. It's really part of our daily vocabulary, creating Monzo. I think one distinction we always make is kind of surface level magic and deeper magic. I think both are really important. Surface level, obviously, things that are visible and immediately delightful, maybe just the right animation or piece of haptic feedback, helpful text to make the customer feel seen or, that human connection. We even coined a term called fidgetability about creating things that are fun to touch and play with, because I think that connects with something deeply human and relaxed within ourselves. So, but I also think that polish and this kind of visual delight is also a signal of what's beneath the hood. Basically, everything you can see and interact with is also, a signal of the parts that you can't see. So we really want to put care into showing that, we put a lot of care into all of this. But the deeper magic, I think, is extremely valuable too. So both sides matter, putting work into, the clever thinking, the heavy lifting that makes things easy for our customer, easier, stress-free. So whether it's like connecting your mortgage in 2 taps takes less than 60 seconds. And we hear this all the time. How did you do that? How was it that easy? How are you able to show me more information than the bank I have this mortgage with? So this is the kind of, I can't believe how easy that was, feedback we get a lot. And this comes from investing in the things under the hood. So I think both of these things really, really matter. Helping the customer do things they never thought they could do, but also making it joyful. I think maybe boring to quote Steve Jobs, but I think he always talked about spirit, not just functionality. And I think both of those matter.
It's so interesting. And doing this requires quite a lot of thoughtful analysis. It requires a lot of customer research. And so for our listeners and their notepads, taking notes and learning about how all of this kind of stuff is done, I mean, is it fair to say that the emphasis is moving away a little bit from speed and pace of delivering features and spending maybe a little bit more time on developing the right features, right? Because so much of the story of startups and fintech has just been pace, just get things out in market as fast as possible. But is that, a question for all of you, but Vuoko, maybe start with your perspective. Do we feel that is changing?
That's a good question. Really interesting. I think we are very deliberate and thoughtful about our launches for sure, especially as we've grown and matured. I think we've found a pace that works for us that's led to successful launches. Like I said, last year we had massive launches with new subscriptions and business accounts and kids accounts. But I think it's about launches for sure, but it's also about the fact that the launch is kind of just the beginning. It's not about adding more and more things, but also making the things we have better. So it's actually, to me, a launch day is fun, but that's where the real learning starts, where we really watch how people use what we've built, listen to their feedback, have that if we talk about co-creation before launch, that definitely continues beyond launch. And it's a lot of what we do obviously at almost 10 years old now. We have a lot of functionality within Monzo that we've recreated multiple times by listening to customers. We have a brand new gambling block feature from last year, a lot of things. So I think, and one thing that's close to my heart, actually, I simply must bring it up. One thing that I personally lead at Monzo, which I'm very proud that we focus on actually, and investment as a business, is the overall health and structure of our product so that everything works and is kind of seamlessly integrated and easy to use together. So it's not just about piling things on top of each other, but investing in the overall experience and how nice things are to use in unison so that the product kind of gets better the more you use it.
I think, to me, the really important point is that loyalty is about how you make people feel. I mean, it's what both of you, Tim and Vorko, said right at the beginning. Loyalty is about emotion. And any individual feature, you can create a bit of surprise and delight, but ultimately, you're not really creating an emotional connection. You can create loyalty because you get certain features that individual customers get locked into. Right? Yonder does this brilliant thing and I love it and I'm just going to stick with it forever. But for most customers, it's more about how do you make them feel in the sort of longer term? Do they trust you? Are you there to support them, to guide them, to help them? And so what I hear from what you're saying, Vorko, is actually what makes Monzo different, and indeed Yonder different, is that listening to customers, of listening and understanding. How can we help them? How can we make it better? To Tim's point, how can we create those emotional experiences that make people remember, that make them feel warm and fuzzy about our brand? Because one of the things that's changed enormously over the last 20, 30 years is brands used to just be able to say whatever they liked about what they were. But now you can go online and you can see quickly what other customers have experienced. And so actually your experience is your brand and your experience is what drives loyalty. So to me, this is all about how do you create magical moments? How do you create those moments of truth and those things that really make a difference? And I just want to say one thing in defense of traditional banks, because we've beaten up the traditional banks a little bit, as we sometimes do on this podcast. There are some amazing banks and amazing credit unions out there that do amazing things for customers without really talking about it. A really good example is when somebody hits financial difficulty, someone dies in their family, they lose a job. Well, what does the bank do? Do they close down the mortgage? Do they shut down the loan? Do they send the bailiffs after you? Or do they maybe forgive that, give you a bit of an extension, give you a bit of a help? Because that, to me, is the real test. Now, if you can handle that well, then you're really deserving of loyalty. And although, there are firms that aren't necessarily, doing the best at digital, there are firms that are actually doing some really good things about for their customers, but not necessarily talking about it. So their heart's in the right place. And that does come through sometimes. Customers do kind of get a sense, actually, this institution is on my side.
And in many ways, those behaviors are features.
Yeah.
And I think the very good banks are the ones that really think about the customer interactions. I think you've raised an extremely good point. We've been talking, I think, a lot in this podcast today about acquisition, about bringing a customer on board and those sort of first moments to bring them in. But the kind of long tail of the communications that the institution has is just so critical. I mean, Tim, how do you think about that in the credit card world?
Yeah, one of the things I think about is we often mistake these around digital moments. But I always say that how we do collections, how we do fraud, how we do customer support is actually what defines loyalty as well. And actually the biggest challenge is how do you do it in a way when you can't give the customer what they want? How do you do a chargeback when someone has done a fraudulent chargeback? How do you have that customer conversation? And these are the things that I always say is what really defines brand loyalty, because it's easy to say, let's delight a customer. I think you use that point of, they've have an issue, but what if they had an issue for 2 years now? Is it right for them to stay in that situation? Or do we need to go and work with them in a new situation? They may not want that. And I think actually our mission or even our brand is actually defined by how do we have the tough conversations, especially in the area of where credit's involved as well, while also making sure we treat people with dignity and respect. Make sure the customer feels like we're really fighting for them. I don't think we always get it right, but it's an area that we've continued to challenge ourselves I still go through our intercom chats. I still look through the chat logs and say, did we feel like we were fighting for the customer? Even if the customer might be in the wrong in the situation. And I think it's really important, especially in an area where there's financial regulation. How do you do AML well? How do you do a fraud suspension well? Because I think that also drives loyalty as well, because I think that's the reality of our businesses as well. We're not a business where take whatever you want, do whatever you want, everything's okay. Actually, we're in businesses where we have to think about delighting our customers, these amazing moments of, for us, going to a travel experience, going overseas with friends, but also how do you help someone when they're in financial difficulty and how do you help them when they're vulnerable? And I think that's why it's so challenging, but very rewarding when you get it right. And so that's why I think the great brands think about the hard stuff as well, because I think the hard stuff is where you're really tested as a brand, and that's where loyalty is really tested.
I love that, Tim.
Yeah, it's such a good point. And, also if you're rejecting a customer, that customer may come back to you again in the future. They just may not be ready for now, but, in a few years they may be ready. So you want to make sure that you're serving them in the right way. It's so interesting. I'd love to talk about personalization and sort of let that word kind of sit a little bit, because certainly in my career over the last sort of decade or so, personalization is one of those things that just keeps coming up from fintechs, from incumbent financial institutions, is, this idea that we need to personalize in order to drive loyalty. Personalization is the thing. Having an ultra personalized home screen, or just knowing who you are and your next best action, and being able to serve you the right message at exactly the right time. All of these kind of buzzwords I'm using are things that I know banks all over the world are thinking about. But Vuk, I want to come to you first on that. How important have you seen personalization in the loyalty picture? How does it factor for you?
Good question. I think, we spend a lot of time talking with customers and we hear all about their anxieties and the friction in their lives. And I think there are some universal truths, and everyone, goes through hard times. So I think we have seen this exact same thing is, people really want to know that we'll have their back if something goes wrong. And I think there's a few buzzwords in our field. One of them is gamification, and we talk about it a lot, but not using that term. I think it's really important when you're dealing with money that it's actually not a game, it's people's life. And so we've been really careful to not use that word internally, because, like when you're playing a game, you can lose, you can have setbacks, that's fine. But when it's about your money, it can be very stressful, very horrible moment. So we need to treat it with care. So when it comes to delight, there are moments where it's appropriate and others where it's not. So we have to really, this is ultimately what really matters as well. When it comes to personalization, I think this in our DNA, similar to, being a social app and aiming to be a really world-class consumer app. I think I'd say that personalization is built into everything we do. From personalized pot images when you're saving towards a goal. We know you're more likely to hit that goal if you have a personal image there reminding you of the holiday you want to take or the car you want to buy. And we have invested in things like personalized app icons and wallpaper to make that product feel more yours. And those do work to some degree, but there's also the social element, avatars, emoji, reactions, making things feel more personal between you and other people, and obviously building things that are more personalized to your needs, like different subscription tiers and all of this. So I think there's different ways. Some of them might seem more superficial, but I think some of them might seem more superficial, but I do think they all add up to, making something really part of your life and look like you.
I agree. I mean, a way I think about loyalty is it's fundamentally about relationships. It's right. Can you form an emotional relationship between the company and the customer? And if you think about the relationship you have with your friends, you don't expect every time you go up to your friends to have to explain your situation. I'm Benjamin, I do this, I have these children, this is my life, and so on. These are things that are important to me. So in the same way, when you go to your bank or you go to your credit card provider, you expect them to know you, because actually, they probably know more about what you actually spend your money on than your partner does, right? So you expect them to know you, to recognize you, and so on. And so personalization is a way of delivering that recognition. Hi, Tim, it's good to see you. How are things? Hey, Tim, have you thought about this or that? That's a relationship. And if you want that emotional relationship, personalization enables you to deliver it in a way a bank manager in a branch 50 years ago could.
Absolutely. It's probably no surprise that something like 71% of customers expect companies to deliver personalized interactions, and 76% get frustrated when this doesn't happen. So people definitely want it. Tim, I want to come to you to talk about your approach to developing point systems, and again, back to the question I asked Voko about our listeners with their notepads. This whole segment is dedicated to reinvention, and it's something that Yonder is a specialist in. Can you give us an insight into how you approached building your points-based system? Like, how did you do it? How did you go about it? I'm just so curious.
We made a lot of mistakes. We tried lots of different things. Some of the early concepts of Yonder were pretty crazy. We didn't want to do points, by the way. Like, I went kicking and screaming 2 points. We didn't want to do it. We originally had tried this concept of every month you would have like a random experience, and then you would get the whole thing fully covered on us. And how much you get covered would be how much you spent last month. Turns out customers had no idea how the hell that worked, and they couldn't get their head around it. We tried to almost innovate on too many dimensions at the same time. We tried different categories: discovery, curation, surprise. And it was like, people were like, what is this? This is too much for me. So we sort of stuck at points because I think people understood that, but then sort of pivoted around that and started to play around with, okay, points is really currency in someone's mind, but what could you do to make that feel really special? And so we said, well, okay, firstly, most points programs require you to activate something, require you to go to a portal, and that's fine. But what if we could bring to life this experience of a friend taking you out for dinner? If a friend takes you out for dinner, you're not going to your friend, can you activate the coupon? You're not saying, can you go and fill out this code? You're just saying, hey, where do we go? And they say, we've got the bill tonight. And so we were really, really big on the feeling of like Yonder should feel like your friend taking you out for dinner. So the whole way it works is you just pay in your card and Yonder just covers the entire bill, up to what we had to now have a fair use limit. We used to not have a fair use limit, and the points economy stopped working. So we had to have a fair use limit. But we really wanted this feeling of someone taking you out for dinner or buying you a flight. And I think that's really different than most programs are. We'll apply a credit on your account. We'll give you a cash back. And I say, yeah, that's fine. But imagine you go out for dinner with a friend and they say, hey, I'll take you out for dinner, but can you pay first? And then I'll Monzo you the money for dinner. You're like, that's a bit sucky. Like, technically, the exact financial transaction is identical. A credit, debit, zeros, out. And yet how you feel is really, really just like, oh, that's a bit meh. The second thing we wanted to think about was we have to make sure the economy works as well. So there's the consumer-facing side, but let's also call it the economy side of it as well. And the economy for us is really important to get right because on one hand, you can't fund these businesses on interchange. Interchange is tiny in Europe. It's 0.3% for credit, 0.2% for debit. And so, okay, well, what value can we offer consumers? And also what value can we offer partners that allows us to offer more value for both sides by essentially forming a discovery element to the product as well. Now, discovery in a way is actually a way for brands to reach customers and customers to reach brands. And yet it's also a core part of the product experience as well. So we have like an experience drop, for example, and every month we send an email saying, here are your new experiences. We get 60, 70% plus open rates in these emails. People message me saying, wow, what's going to come up next? And they're excited to see what's coming up next. And there's a moment of joy for customers. It's also a moment of exposure for brands. And so now we're starting to like plan on the economy and say, look, in a world where it's just 0.3% interchange or 0.2% interchange, you're kind of stuck in terms of how you could offer value. But if you're offering value in a different way, then you can start to offer more financial value to customers because you've got an economy that works better for it. But secondly, you're also offering an experience that is more than just financial value for customers as well. Because they're going, well, actually, the value for me is not really the financial value for me, it's the discovery. I've got some customers who are like, look, I earn 100, 200,000 pounds a year. I don't really care about getting a free flight to a dinner or a hotel stay. What I love, though, is getting ideas on where to go. I love starting my search here on the week and saying, where should I go out this weekend? What should I do? And so the value we're providing is not just financial now, but it's discovery value as well. or it's the valley when you do something and then the magical, we call it the seamless redemption process, where you just tap in your card, you swipe in the app and it goes ding, Yonder's covered the bill. People love that experience and they even talk about this like magical moment. And so for me, that is more than just the sort of Excel points economy, but it's also the product experience around it. But you can't decouple them. If you sort of do one or the other, it doesn't work. Like we can't just make the magical experience but offer no financial value. The economy has to work. But also, if we do the financial value, but the way you use your points is you go to a portal, you print out a coupon and you go there, well, you're not taking it on a date there anymore, because it's a bit embarrassing taking someone on a date and bringing a coupon along.
Yeah, it's so interesting. Points is enabling discovery, but they both work together to make it happen. And I guess the other thing about your point about the interchange is that it opens up revenue streams with merchants, and it almost takes your business down that very interesting merchant direction as well. And that's another huge growth area in fintech as well. All right, everybody, we are at time. This has been a fascinating conversation. Thanks so much to all of you for joining. I'm sure we could talk about this more and more. Where can people find out more about you? Benjamin, come to you first.
People can find out more about me and the work the team's up to at 11fs.com, or you can follow me on or find me on LinkedIn.
Awesome. And Rocco?
You can also find me on LinkedIn. You can find Monzo in the app and Play Store and at monzo.com.
And Tim?
You can find us at yonder.com, and you can find me on LinkedIn as well.
And you can find me, no surprise, on LinkedIn. All right, thanks everyone. Thanks for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts at 11fs.com. Thanks very much and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.